Good afternoon, everyone, or good morning, depending on where you are. Thank you for joining this week. This week, I am back in my office, so we'll have a more normal setup. We have a very large set of questions, so I'm going to jump right into the questions. George, can you also just chat me the link to the live comments, and we'll just run through these questions and see where we get to. Okay. First question. Compliance rules such as know your customer, anti-money laundering, countering the financing of terrorism exist for banks and financial services firms. Bitcoin and other decentralized cryptocurrencies do not meet these requirements, which is a big advantage for users and a big problem for authorities. Is it possible to implement these for Bitcoin and other cryptocurrencies? From one side, it might kill Bitcoin. On the other side, an illegal tender, we should follow these rules, et cetera, et cetera, et cetera. Good question, interesting question, but I'm going to kick this one to next week because we're talking about regulation next week. So if you don't mind coming back next week, we will roll this question over and cover it in next week's session, because next week's session is about exactly these types of regulatory topics. Next one. Would it be possible to elaborate a bit further how you see the challenges of the insurance companies regarding advantages that a blockchain solution might provide in underwriting, claims management, solvency reporting, and regulatory oversight? Yes, this is I'm happy to elaborate on this. I think this is a question where for a traditional insurance model, it will be hard to do it with a public blockchain for a variety of reasons. So let's think about each of these categories that are mentioned. Underwriting is the risk assessment of a particular insured risk in a particular claim. At my first approximation, I don't see how that risk assessment has particularly anything to do with a blockchain. That's coming from operational data about the business or the credit risk or the auto or health, life, etc. If you want to get a significant amount of life insurance, you have to go get a full medical examination, blood work done by the insurance company's person, not your own blood work, because they don't trust you. You will have to fill out a complex questionnaire, etc., etc., etc. None of this strikes me as particularly easy to move to the blockchain, because you'd have to assume that we already have a world where all of our data is available on the blockchain in some type of secure, validated form, and then you make it available. We're a long way from that. That's underwriting. Claims management seems to me to have a similar problem. If I said I've insured the main building of the University of Nicosia, and there was a fire and the sprinklers came on and certain classrooms were damaged, I'm pretty sure for the insurance company to pay a claim, they're going to come and evaluate it and bring experts and see what happened and see what the damages were and get quotes to repair them, all of which is offline, off blockchain. Solvency reporting, which is related, I think, to, well, similar to regulatory oversight, but different. For long-dated insurances, life insurance, for example, but even for property and casualty that tends to run on annual or few-year cycles, regulators are highly concerned about the solvency of the insurance company. And so they want to see their assets invested in a diversified, low-risk portfolio, well-capitalized, so that they don't worry that the insurance company won't be able to meet the claims of the insured if those claims come through. It'll be a very long time, if ever, when any regulator says, I am going to take your digital currency, your Bitcoin, your Ethereum, etc., as a sufficiently low-risk solvency, proof of assets, etc., etc. I simply don't see that happening. Related to that, regulatory oversight in general, insurance is a very highly regulated industry, among the highest regulated industries on the planet. Given already that I see as an amateur in insurance multiple difficulties moving anything to a blockchain, I would imagine that the regulators are going to be super conservative on this topic. I don't think you're going to see them pushing anytime soon. Now, where could you see something coming sooner? And sooner, I would still say it's not today. And when I'm thinking about blockchain, I'm thinking, what is a truly actually decentralized solution? You could do it for things closer to weather contracts, disaster insurance, things that are publicly obvious, relatively shorter term, and that it's definable what has happened, right? So if you're thinking about underwriting the risk of a hurricane hitting Florida, you don't need any data from the insured. All the data is already publicly accessible. If you want to establish whether a hurricane hit Florida or whether 3 inches of rain fell in Michigan, again, you don't need a specific claims manager from the management with the insured. These are generally knowable facts. So you could envision in a world where we have oracles, which we haven't discussed yet in this class, but oracles are a concept, still not a reality, a concept by which data from the outside world gets incorporated into a blockchain. So if you can imagine that there is, let's assume for a second it exists. It doesn't. I think it will exist, but it doesn't yet. But let's assume it will. So if you can imagine that there was a crowdsourced, oracle-oriented way to get facts about the real world into a blockchain. Who is the president of the United States today? How much did it rain in Palo Alto, California yesterday? And that was accurate and consistent. Then you could write things like weather contracts or other prediction markets or catastrophe bonds in a purely decentralized blockchain manner. You can show that you have the assets available by tied up in some contract. You can define what the event is that you're insuring, and you can decide which of the various oracles or combination of them or subset of them or superset of them will be definitive for the answer to that question. That's doable once someone solves oracles. Individualized insurance, though, I think has a ways to go before we can be talking about that being on the blockchain itself. Okay, let's go to the next topic. When consumers do have concerns about giving credit card credentials to risky vendors, cryptocurrency could be the solution, I agree. But a risky vendor could do other risky things regarding finalizing the transaction in, for example, not sending the goods as ordered. The morals and the behavior of a merchant will not change in my perspective using cryptocurrency. Correct, it's just there are different types of risks. So you're right, if you have a vendor where you're relying on them to send you something in the future and you send them cryptocurrency, you do have that delivery counterparty risk. This wouldn't apply, obviously, in a vendor that's giving you something physically. The risk with credit cards, though, is something different. The risk is an open-ended risk. You're giving your credentials that could be used for other transactions. So if I buy $3 worth of coffee with Bitcoin, my total exposure is $3. So let's say someone doesn't deliver me the coffee. Let's say the coffee's lousy and the coffee shop won't give me a refund. Okay, I've lost $3. I don't actually have anyone I can go complain to. There's really no arbitration. So I've lost my $3. But if I give Starbucks my credit card credentials, and by the way, regardless of whether Starbucks has good morality or poor morality, they store it in their systems, and then their system gets hacked by someone, something that happens with tremendous regularity for two big companies. Suddenly, my credit card credentials are available in the world at large. And I'm not necessarily limited to $3 worth of exposure. Now, it's interesting. In some countries, the United States, when the credit card companies wanted to accelerate the development of online payments with credit cards, they limited the liability of the user to, I think, $50. But it's not true for debit cards in the United States. It's not true for credit cards in many other countries. So if you're worried about the vendor's ability to secure your credentials, either because you're suspicious of the vendor's ethics or you're suspicious about the vendor's security policies, which, by the way, it's very hard for most vendors to keep these things secure. What Bitcoin does have as an advantage is you're limiting your exposure to the size of the transaction. And that is, in fact, something different. Finally, I understand why Bitcoin is a big deal. You should lead with this unit. And it is showing the, I need to put this in front of the camera. This chart, look at this, visual aids, that is showing the cost of a credit card transaction and a Bitcoin transaction. And it's, the bars are as follows. The red is the profit, that's about the same. Fraud and regulatory is the top, that's much, much bigger on a credit card transaction. And in the middle, you have the operating expenses. The total comes up to 2.5% for the credit card processing and 1% for Bitcoin. I think this chart is true and not true in the following ways. I think it is definitely true that today you can do Bitcoin merchant processing for less money than you can do traditional credit card processing. And you can go sign up for a merchant account right now and do that. The issue is, let's say, is that the current solutions with Bitcoin haven't gotten mass consumer acceptance. And part of the reason they haven't gotten mass consumer acceptance is because they haven't done some of the things that credit card companies do that do add costs. And so it's a slightly unfair comparison. I guess what I'm saying is if Bitcoin had gotten to the point of where credit cards are in consumer acceptance, I think the cost would go up. However, I think the fraud cost, more than the OPEX, the fraud cost, I think can definitely go down because, and it depends where the liability ends for the credit card processing, it's a push transaction. So if you push Bitcoin, as we said in the prior example, you're limited in terms of fraud to the cost of what has been pushed. And so that should reduce the cost of fraud. Now, there's a question of like, how do you protect someone's Bitcoin wallet? And their fraud is, theft is definitely possible. And who's going to have responsibility for that, which is an interesting question. But I do think for the purely payments function, Bitcoin could be more efficient, though probably not as more efficient as it shows on this chart. Next question. I was cross-reading the paper proposing RSCoin, and I couldn't help but think if the guys who created the paper really believe RSCoin could be adopted by the Bank of England. Believing that RSCoin could be adopted seems to be the same as believing it could go back to gold standard. It's not in the interest of the banksters. If, according to the author of the paper, it's a Peter Pan system, I think he's doing Peter Pan's daydreaming. What do you think? There's a lot going on here in this question. RSCoin is a private blockchain solution. It means it has centralized validators. There's no reason a bank couldn't do that. It's just not the same thing as Bitcoin, right? There's also no reason, if you're saying, I'm going to have a centralized point of control, and I've discussed this with central bankers, where they think if they were having a digital currency, they would feel the need to have the implementing into the currency itself, the different AML and KYC rules that banks implement. Well, there's no real reason you have to use a cryptocurrency to do this. You could even just have a normal database-driven system at the central bank that gives access to consumers and access through APIs, and people can use it in a validated manner with centralized control. So if you accept the concept of centralized control, a lot of things get easier when it comes to developing a digital currency. Throughput is not some type of technical limitation for Bitcoin that they don't know how you could increase the number of blocks per size. The reason there is a debate about this is that folks believe that it will reduce security. The same issue with long transaction times. There's no technical reason why a cryptocurrency tomorrow couldn't have 10 megabit byte blocks and transactions every minute and fit in a lot of transaction processing. The concerns about it are more around the fact that it becomes harder to maintain decentralized security in that model. If you're not trying to maintain decentralized security, then it's easy to do it. You could have a database that transacts every 10 seconds. No big deal at all. You could do it in real time. No big deal at all. It could be a real-time processing system. By the way, I think banks should do that. I think it should be possible for a consumer to say, you know what, I want to have 100 euros at the European Central Bank. I don't want to hold it in another bank. I don't want to hold credit risk. I just want to keep it there. I want to have an account there. Part of the reason I think those don't exist is when central banks were formed, this was economically unfeasible for the central bank to serve consumers, as opposed to the central banks and central payment systems just serving big companies who then subsequently made the investments in branches and so on to serve consumers. That's changed. So it doesn't sound to me irrational that a central bank could give access to central bank transaction processing to consumers, or accounts with the central bank to consumers. So that seems possible. By the way, it also doesn't seem, I wouldn't link the fact whether a bank uses a cryptocurrency with whether or not the bank is going to change its monetary policy. Let me give you an example. Let's say the money supply of the United States is, depends what measure you're using, but let's say a relatively narrow measure is $2 trillion. The US could issue the dollar coin in a traditional Bitcoin type approach. There's an issue 50 billion of them without changing its monetary policy at all, right? It just could say, oh, I'm still targeting the total at 2 trillion. Of that 2 trillion, 50 billion is in a cryptocurrency, and that cryptocurrency has whatever issuance policy they want it to have. But it's not, it is, and unlike any other player, a central bank can guarantee the value of a cryptocurrency. There's no other way you can say this crypto dollar is worth the same as a dollar. Why can a central bank do it? Because they can print dollars. So you can never go back to central bank and say, I want $1 for my crypto dollars. So sure, you can always have a dollar. So you're either going to take one of these three risks when you're doing a currency. You're either going to take counterparty risk, or you're going to take monetary risk, or you're going to take foreign exchange risk, so conversion risk. You can't get rid of all three of them. You know, with Bitcoin, you say, oh, I know what the monetary policy is. Sure. I know that there's no counterparty risk. Great. Counterparty means I'm not on, someone else is not on the hook to deliver something, and that person can default. But you have foreign currency risk. So it changes its price relative to other currencies all the time. A central bank coin wouldn't have foreign currency risk vis-a-vis whatever currency that bank is operating in. It doesn't really have counterparty risk because it can always print more dollars, but you're going to be exposed to the monetary policy of that central bank. A privately issued dollar coin could, well, effectively has both monetary risk and counterparty risk, and it just eliminates foreign exchange risk, because you're then counting that the bank that has issued that coin can meet its obligations. So I know it's a long answer to that question, but I do think central bank digital access to consumers is going to happen. I do believe central bank cryptocurrencies are going to happen. I don't believe that either A or B has anything to do with banks changing their monetary policy. They don't have to change their monetary policy. They can still do it without changing their monetary policy, and there will be plenty of people who will be happy to hold cryptocurrency dollars for all the digital convenience reasons they want to do it, and no FX risk. I mean, just like there's a lot more people today that are happy to hold dollars, trillions of them, than they are that are happy to hold Bitcoins. I see there was a follow-up question that says, why would banks give up their ability for fractional reserve banking, et cetera, et cetera? I'm saying nobody's going to replace all of their monetary supply with a cryptocurrency. I'll be very surprised if I see that. What I won't be surprised if people say, wow, it's really useful to have a digital currency because machines can use it, you can use it on the web, you can use it for international transactions. I can't imagine crypto dollars or crypto pounds without having to imagine that banks are eliminating their whole approach to monetary policy. There's also another follow-up on a similar topic on push and pull systems. Let me tell you what it means. A credit card is a pull system. It says, here are my credentials. I've given you my credentials. Go to the credit card company, and they're the processor, eventually the credit card company, eventually your issuer, and say, I would like $100 from Antonis. If someone is unethical, they can go ask for $200. It's a pull system. They're pulling off your line. A push system is like cash. Cash is a push system. If I give you if I come somewhere and I only have $10 on me, and you sell me a lemonade, a deluxe fancy lemonade, and I give you $10 in cash, then I've pushed $10 in cash to you, and that's it. Let's say I don't have any more cash on me. You can't go anywhere else to get the rest of my cash. The rest of my cash is locked up in a bank vault somewhere. It doesn't matter you're ethical, unethical, et cetera, you can't take those extra $10. So that Bitcoin is a push system. If I push $10 in Bitcoins to George still doesn't have any access to the rest of my wallet. He just has $10 worth of Bitcoins. Okay, this page is out. This page is out. We are cooking. As you can tell, I am energetic today. So we are going through this at a high rate of speed. Okay, someone asked, I have downloaded bitsquare. It seems great. A pure decentralized P2P exchange with arbitrator routed through Tor, no need for identification, open source, not a company, does not hold any Bitcoins, no credit risk, no fractional reserve, fixed trading free, cheaper than a traditional exchange, perfect big brother, developed by a single guy, thumbs up to him, no liquidity whatsoever, entered the game too late, it should have existed, why is the Bitcoin community not actively promoting it? The problem that tends to happen with decentralized exchanges is trading speed, right? Because you're still relying on a manual approach effectively to switch from Bitcoins to cash. Generally, when you have slow trading speeds, you have low liquidity. And that's the reality. It's the argument of the high frequency traders and why markets need to support them with very fast trades, because they add a lot more liquidity to the system. You have a system that has effectively relying on, if I'm not mistaken, deposit slips in the traditional banking system for, I've now sold some Bitcoins and I'm back to cash, and now someone has to deliver cash to deposit it, and an arbitrator checks the deposit slip, what have you. That's a very slow process, right? A basic exchange, normal exchange, does have a little bit of a sign-up process. Once you're in, though, you can go from cash to Bitcoin and Bitcoin to cash and cash to Bitcoin on an ongoing basis as much as you want in seconds. And so that, I think, is always going to suppress liquidity in trading. People aren't going to want to trade with day-long or two-day-long cycles. I think it has another risk. In some countries, I think participating in such an exchange might be considered unregistered money transmission, unregistered financial services, and so on. So I think it's going to depend on the country. I think it's not clear There was a case in Florida where someone who was in, what's it called? Not Open Bitcoins. George, help me. The name of the big decentralized player in Bitcoin. Oh, well, I think of it. He was taken to court. No, not Shapeshift. The original one, the one where you would trade among yourself. Local Bitcoins. Local Bitcoins. So there was someone who was just working with local Bitcoins in Florida. They took him to court. He was convicted of running an unregulated money transmission firm. The conviction was overturned on appeal, which is good. I think it was the right decision. But hey, that's some interesting risk to take. So it's I think you're going to have these types of risks in certain countries on the purely decentralized exchanges when they then have to touch the traditional banking system. And when they touch the traditional banking system, someone's going to say, hey, why are you depositing $50,000 in this guy's account? And they say, oh, I'm trading in this decentralized Bitcoin exchange. They're going to freak out in most countries. They're going to file a suspicious activities report, and then good luck trying to explain what you're doing. So unfortunately, now, not to discourage anyone from decentralized trading, but I think you will have these issues in certain countries under certain regulatory regimes for certain types of transactions. Okay. My question relates to slide 34. In 2010, the number of cashless transactions of all types per year per inhabitant was 5% in China and 6% in India. According to Bloomberg, mobile phones have grown from 50 million in 2010 to 1.25 million in 2016. Another unconfirmed statistic is that 60% of Alipay's payments are made on mobile devices. Surely these numbers would suggest that 2010 cashless is very different than today. I agree, particularly in the case of China. We have some statistics that we've looked up. WeChat is processing 550 billion in payments per year. That's double PayPal. Alipay hasn't disclosed volume since 2013, but it was 519 billion in 2013. And it has 500 million users. And wow, this is interesting. WeChat is now doing 6 times more transaction volume in 6 days than PayPal did in 2015. So I think you're absolutely right in the case of China. And I think we need to see if we can get any more recent figures about the Chinese market. It has exploded with mobile payment applications. I think India has not had this level of, dramatic growth. And I believe I have seen, though I wasn't able to reference it in time for this discussion, global figures more recent than 2010, probably in the 13, 14 range, that still show the overwhelming majority of transactions worldwide are cash. I don't think that has changed worldwide. I do think it is changing rapidly in China. And I think that's an excellent piece of feedback that we should go do some more digging and see if we can get some more information on a more recent basis for some of these faster moving countries. And if we do, and if we do it in the time of this course, we'll definitely share it with you. I think that's a very good point. Okay, I think we have blasted through the existing questions. What else do you have? What else are folks discussing? What else should we talk about? Oh, George just shared a page that said 2015, 85% of global transactions were still in cash. And that presumably includes the developed countries where, certain countries, I mean, the most advanced countries in this topic, as in many other topics, the Scandinavian countries, are rapidly moving to a cashless society. So 85% globally appears to be, that intuitively sounds like a reasonable figure to me. Anything else? Or I see George is typing something. George mentioned the following. Some students have asked about a graduate from the MSc program participating in a future MOOC session to tell them about their experience with MSc. I think that is a perfect idea, wonderful idea. We should definitely do that. Why don't you organize that for the next session, George, or one of the future ones? I think that's a great idea, because it's one thing to hear it from us, it's another thing to hear it from people who have gone through the program. Good. So George says he will take care of that. All right, hold on. Someone has referenced page 48. I need to remind myself what is on page 48. I confess I do not have all the pages of the presentation memorized by page number. Yeah, here's what I meant here. So let's say you believe that, and I'll make a simple example that I think will explain the general concept. Let's say we believe that once people have Bitcoin, they can start trading directly with Bitcoin and doing cool remittances across borders with Bitcoin. Sounds great. But then that means people in all these various countries that are going to be trading together in Bitcoin all need a way to get Bitcoin in the first place. For most people, that's going to be through some type of local exchange in their country, or at worst or at best in their currency zone. So if you want people from the Philippines trading with people in Bangladesh, trading with people in Sweden, trading with people in Nairobi, trading with people in Bolivia, all with Bitcoin, kind of the limiting factor on that is building exchanges in each of those countries, making sure they're legal and regulated, making sure people know about them, can use them, et cetera, et cetera, et cetera. That's going to be a long process. Basically in operation in 2 or 3 currency zones at any even minor scale already. And by the time it gets around the world, taking into account it's not only the technical aspects that have to be done, but the regulatory aspects, and a lot of countries will be afraid of it at first, That's going to take some time. And then the same is true for any other business you want to think about that involves Bitcoin. Oh, let's say we want to build merchant processors, credit card networks, merchant processors, that type of thing. You know how long that's taken the credit card companies? It'll happen faster now, but it's taken decades, right? Signing up the merchants. Signing up the merchants is a firm-by-firm activity. And so I remember laughing in the early years in 2013 where things would make news along the lines of so-and-so sandwich shop now accepts Bitcoin. This is the type of thing that if Visa and MasterCard were reporting it, it would be every like 10th of a second. Some new merchant, some new restaurant, some new now accepts Visa. So this market, MasterCard. I mean, these guys have millions and millions of merchants, and they're signing up thousands every day. So merchant processors is another type of business that doesn't scale super well across borders because it's ultimately a company-by-company business that you have to sign them up, and that will also need to be rebuilt and duplicated across borders or at least currency zones. It's at least conceivable that, let's say, within the European Union, someone will serve multiple countries. When you're going across currency zones and therefore across regulatory regimes, you're typically seeing different players pop up in those different areas because of different regulatory regimes. What else? Someone writes, did you know the Dubai government is making a Dubai coin? We're assisting them in developing an exchange. The Dubai coin is proof of stake and most merchants will accept it. I had heard that. I don't know very many details about it, but I had heard that. It seems interesting. And Dubai is the type of country, financially oriented, small, easy to test, that you can see these tests happening in first. I would expect the first countries to do these types of tests would be the Dubais of the world, the Singapores of the world, more so than the US or the Brazil or what have you. Excuse me 1 second. Sorry, I'm back. Great. Do we have anything else? All right, George is saying we can wrap it up for tonight. Thank you very much, everyone. Good set of questions this time. Look forward to the next session. It won't be next Friday because I'm going to be traveling in India, and George will be suggesting a new time for that. And hope everyone has a great weekend.